Hey guys, it's July 24th. As you guys know, I do have a Substack now. I've been putting stuff behind a paywall for my paid subscribers. And if you are the next 10 paid subscribers, you'll be getting more of the institutional treatment, meaning we're going to bring you in, talk monthly, also doing group sessions, helping you with your position sizing, trading psychology, and more. So if you get on that, I'll be reaching out to you as soon as possible. So the video today, I just kind of wanted to go what's been behind the paywall so far. I won't be doing this much, but at the moment, I've had some more free content on there, and I would just want to show people what I've been doing on there. So basically, I used to put stuff out of what I was doing a little bit more without constant updates. This will be updates. This is what people have been asking for. They want updates of what I'm doing, how I'm doing it, when I'm getting in and out of trades. So I'll be posting that on Substack. So look, starting out here. So what I posted the other day. Now, also most of my articles will have a voiceover. I can write, but I'm not much of a writer. I am more of a speaker. I like to speak. I'm always coming up with new ideas. This also helps me to come up with new ideas to help myself as well as you guys. So starting out with the model weights and position sizes. So model weights, what this means is my futures portfolio and options portfolio is here. That's 35% of my liquid assets. So that means, not real estate holdings, not other things that are illiquid, things that I wouldn't move in and out of, on a 2-day basis if I had to, or I really couldn't. These are the things that is kind of your trading income per se. And then so things like futures and options at 35% of that cash. Long-term portfolio, 35% of that cash. That could be your retirement portfolio, whatever your long-term portfolio is, however you use it. Physical gold and silver, something I like to keep on hand. I'm not exactly a gold bug, but I do like it for certain reasons. I do like it as a long-term investment, especially gold. Something to just kind of hold on to, diversifies my assets a little bit. Also fixed income, meaning, last year we had an update on I bonds. I bonds being having such a great yield last year, so we put out that alert. People could get into I bonds, other fixed income assets, and so on. Whether it's CDs, money markets, however you want to look at that. That's one way to do it. But either way, we always want to diversify those assets a little bit. You don't want everything in just one thing. If one portfolio is doing poorly one year, maybe another area is doing better, and so on. And this is where I'm trying to generate alpha. This is where I'm trying to get a steady gain, and this is where I'm just trying to basically stick with inflation, beat the rate of inflation if I can, or stick around the rate of inflation as the years move on. Long-term portfolio. So, we've had a great year in the tech space and semiconductor space. Those have been great trades. Gasoline is a brand new position that just was added very recently. It's been a great position so far. Once I got the signal, it's been a great long. Energy is also brand new position that's on here recently, so recent that it wasn't even in this update. So energy also as well. Mexico, sugar, energy. No, sorry, energy is on there. OIH. Germany, Sweden, emerging markets, home construction, tech, industrials, defense. And then we have some small positions in silver, gold, and gold miners that were at the beginning of this year. These positions have been added to, so now they're a little bit bigger in size. Japan steel, these are ETFs. Bitcoin, and what I put on the bottom is some people, sometimes it's managed through individual stocks, sometimes it's managed through the ETFs. Some people do it all differently. I think that if you are a stock investor and you do pay attention to this page, what I can do is kind of help you understand where the relative strength is going, what's trending, what's moving. So if you are investing in certain individual stocks, you can look at those areas to find them. Futures portfolio. So we're long a lot of things at the moment. Bitcoin, that actually is getting very close to a stop today, but we'll see if it actually hits it. Cattle, copper, longs on the euro, the Great British Pound, the Swiss franc, Mexican peso, cocoa, the Nasdaq, lean hogs, corn, winter wheat, which has been a phenomenal trade the last week or so. I mean, that's been moving in a way I didn't expect it to. But once again, like the COT signals are very powerful. So when I'm pointing to these COT signals and I'm saying, hey guys, we're getting these wild COT signals, we're at record longs in some of these positions. That doesn't mean it's going to turn right there. What it does mean is as we get buy signals, we should be taking them because those trends can last for a long time. Sugar, gasoline, soybean oil, canola oil, those have been great trades as well. Global markets, meaning the indexes in Japan, Mexico, Germany, emerging markets, gold, silver, platinum. The 2-year bond is the last short left in the bond space. So we'll see where that ends up, but right now it's getting closer to a stop as well. Bonds have just been full of chop lately, so we have to see how that goes. I do think bonds are going to move to the upside. I still believe that. I still think that that's what everything's saying, whether it's the COT reports, my predictions, my models, everything is saying that the bonds should move higher into the end of the year. That doesn't mean they have to. We don't have a buy signal in the bonds. As you see, there's not buy signals here. It's just been in a range. And so as it's in a range, we have to just kind of wait for it to move one direction or the other. Sometimes it's more important to just be able to sit on your hands. So what I wanted to share with some of our subs was some of my models. So we have a model here that's a monthly thrust signal. And this kind of pointed out that we were going to possibly start a new bull market here. So most of the time, this signal leads to a pretty good rally. So we're seeing a really good rally. This is something we don't see in bear markets. We do not see this signal in bear markets. We do see this early in bull markets most of the time. So we need to pay attention to this signal. Yes, this looks like a very short-term move, but this is a very long-term. There's a monthly chart all the way back to 1978. That's about a year rally there. So, and I think most of them, when I calculated it, the smallest rally was about 30-something%. So we'll see where this ends up. But that to me signaled that we were still going to move up higher. I talked about, if you go back to my video that's in October 2022, I talk about the market bottoming in October. It did bottom, but it was choppy. There was a lot of chop. But now we're starting to see a nice rally. The rally's continuing. We're getting closer and closer to all-time highs. To me, we're in the beginning stages of a new bull market, not a bear market. The put call ratio. So looking at the put call ratio, we're seeing that same type of thing. This is a monthly thrust, and the next chart is the put call ratio. And we see that panic set in high. When we get panicked to those crazy levels, we're close to a bottom, close to a bottom, close to a bottom. So we're seeing, to me, that what was more interesting about this one is that it didn't happen here. It happened here. At the beginning of 2023, which subsequently we led to the biggest rally we've seen in the first 6 months of the year in tech and semiconductors. I mean, I don't know if semiconductors had a better year, but I know tech hasn't. So tech has had a really good year, and we're seeing that bottom signal came in right at the right time. Looks good. This is another model I really like to use, VVIX to VIX. So I have a bunch of models. These are just a few of them, but some of these are I just wanted to share with my subs and just kind of show you guys what I would use to kind of keep me out of trouble. I don't look at signals as a way of like everybody has to be like me and you guys have to be systematic and put on every trade everything says. Sometimes my signals are as simple as keep you out of trouble. And for this one, I don't want to be investing in, I don't want to be buying things when I get this sell signal. As we see, this sell signal just kind of keeps us out of trouble, right before the market topped. It's keeping us out of trouble once again. We didn't want to be some people might find this, oh, well, you missed that last part of the rally. Well, I don't really give a shit about getting the last part of the rally. What do I care about the last part of the rally? What I care about is catching the meat in the middle. I don't care about perfect bottoms. I don't care about getting out at the top. I want to catch the meat in the middle, and that's going to keep me on the safe side of each trade. This isn't a timing tool, so people see that the buy signal didn't come till this point. Well, you could have taken buy signals in something else if you wanted to. However, you want to put that together, but basically, to me, it's a warning signal. When I get that signal, I want to be on edge when I see that. There's very few signals that can tell you about market tops. This is one of them that I really do like. Next signal is a 2 and 5 crossover system on NASDAQ breadth. This is a more short-term signal. As we're seeing, you got that big move here. So basically, it's a crossover system. So you buy here, you sell here, you buy here, you sell here, you buy here, you sell here. Well, there wasn't even a sell. Sorry. You buy here, you continue here, you'd sell here, you'd buy again. So, I mean, it's basically a very short-term swing system. Once again, keeps you out of trouble. PMO buy all signal. This is cool. I learned this from Breakpoint Trades, actually. They have a great website if you guys check it out. But Breakpoint Trades kind of showed me a PMO buy all model many years ago. Wasn't using the same exact type of chart, but I think over the years they do now. But now I'm confused because I haven't been on their page in a bit. That's a great page. I should go to it soon. But PMO buy all signal basically gives you a nice swing system, even more short term than the one before that, in and out of trades. Now, I use a lot of Dow theory style charts. So when you look at something like Dow theory, once again, there's nothing you're ever going to look at. This is what annoys the shit out of me when people talk about technicians and they say, oh, well, you're a technical trader, you can do this. It works sometimes, it doesn't work other times. There's nothing that works all the time in trading. There's nothing, like, I guess you could buy the S&P 500 and walk away, but if our point is to outperform the S&P 500, we have to work on probabilities. We have to be willing to put trades together that sometimes aren't going to work, and just get out with a small loss, because we're looking for those big winners. We're looking for outliers. As we're doing that, we can outperform the S&P 500. So if you can't outperform the S&P 500, what are you trading for? So you have to look at that year after year. But I love these Dow theory style charts because it kind of just gives me a roadmap just as well. So if we're looking at semiconductors, we're seeing that semiconductors, most of the time, when semiconductors are strong, the rest of the market follows. When semiconductors are weak, the rest of the market doesn't follow. You see the divergence here. You got this almost a higher high here. Well, it was a higher high here, lower high here, a little bit of a divergence, and the market kind of comes down. And then once again, you start to see this relative strength happen in semiconductors against the Dow. I use the Dow not because I think it's the best index in the world, just because I've back tested it the most. It goes back the furthest. I've found it to work well, better than just about anything else I use to measure relative strength when I'm looking at some of these Dow style charts. So that's why I use it. Then if we look at the Dow, we're seeing that semiconductors have been a major outperformer most of the time when that's in an uptrend. When this is in an uptrend, the market is in a very strong point. I don't want to be shorting anything in that type of market, and I want to be long where the strength is, and it's in the tech space. Transport to the Dow. Now, that didn't really turn up for a while. We did see the Dow came out real strong last year out of October. And when it came out of October, it had a really nice move, but it started to top out, and then transports even underperformed that. And then all of a sudden, transport started to move up. It's still strong right now. This chart's a little bit older because it's from a week ago or so, but it's been a good trade, or sorry, not trade. It's been a good trend. Transports has been holding up really well, and it's starting to get to this upside at the moment. It's breaking out to the upside past the Dow. I think the Dow followed it right after we posted this as well. Dow's been really strong now too. So NASDAQ to small caps, another ratio chart. Now, we're always looking at these not to tell us, what exactly is going to happen. It's not a timing tool, but we're looking at intermarket analysis to see where the major trends are, where if I'm looking at a narrative to understand the market, I need to understand that, hey, at this point after the election, the value trade kind of took over. We had people moving into things like financials and energy and so on. And then people moved out of tech, and tech didn't really do well in 2021 or the beginnings of 2020, or even all of 2022, sorry. But then it started to move to the upside, and we started to get up and over these, whether you call it cup and handle, head and shoulders, it really doesn't matter. What we're seeing is consolidation, starting to get over this consolidation here. It's still moving up. That tells us we want to be in the tech space, even though small caps are finally now starting to catch up. The euro to the dollar. So euro is pretty much the inverse of the dollar. Yes, it's a little bit different. It's the biggest weighting in the dollar index. So looking at that, we're seeing another breakout to the upside. Probably another trend higher in the euro, I would assume. This is a good style breakout. If we see a breakout and we're just going here, like let's say, you're looking at resistance somewhere here in this area. There is none, but let's say there was resistance here in this area. This first run up, I would say, that's a grade C breakout, meaning the worst breakout. And then if you get it here, you could say that's a grade B breakout, meaning we did pull back and then we went higher. These ones that just run straight up like this, that's not a good trade. The ones that pull back and then move higher, it's a better trade, but the best ones happen when we get a pattern. This is an ascending triangle, more consolidation, a nice squeeze pattern, volatility starts to drop and then break higher. That's a much better pattern. So I would say that this could probably move higher, possibly be another leg up in the euro at the moment. And here's a gold index here. We're kind of we have this triple top here. It has moved higher. We could see if this could break out of this area. Pretty much if you do not have a position already, it's something to wait till we get up and over this zone and then possibly get long gold. So what I went through with them was a little bit more in depth than that, but just wanted to kind of give you guys an overview. Also, I wanted to talk about the energy trade because, energy is always one of my favorite sectors to look at because it can tell me a lot about the economy, the state of the world, and global and macroeconomics, as well as global and geopolitics. So if we're looking at energy, I posted this July 13th, and energy started to really start to give signals that, hey, this could happen. This is something that's starting to look up. It looks really constructive. Everything started to move the right way finally. We haven't been very bullish on energy for a long time. Energy has been kind of a bad trade for a long time. It's just been in a downtrend, and then it consolidated forever and just chopped around. Now we're finally seeing something that's constructive in energy. We're seeing we got finally to these major long positions. This is what we want to see if we're looking at a COT report. We don't really care that it's just moving up. Like, that's cool. Energy, commercials are buying energy. That's great. But what we want to see is we want to get over all these, all these old highs. Sometimes the landscape in energy will change, and most of the time they're never going to be net long. But when we do see buying in it, this is a thing that tends to put in bottoms. Now, as we see a bottom in the market, we're not trying to buy that bottom. What we're doing is we're waiting for a buy signal. So this tells me, when this started to move up, hey, it's time to start looking at the possibility that energy could be a long again. And then I'll wait for my buy signals, not before that, just after that. Also, you like to see a drop in open interest kind of happen before this happens. And we did see that nice drop in open interest, starting to move up, getting to that buy signal. I would say it's probably a good time to be long the energy sector. And one thing that kept coming up on my Twitter, which I should answer, people continued to ask questions about like, why would I buy energy now? Why would I be interested in energy? I have these good trades on in tech and these things. And to answer that question, it's very simple. So as a trend follower, like we're hunting for outliers. If I just go, number one, I know the market doesn't, nothing goes up forever. So if I'm sitting there and I'm happy long energy, and I just, let's say I go longer and I just continue to put on more longs, I get longer and longer, I'm at 100% of my accounts in something like tech to make it an extreme. At some point that stops. We have to always be open to the market shifting, rotating, going through new trends. And when we have buy signals, it's a buy signal. It's as simple as that. For me, I use different inputs to kind of put up with, get these signals. So I'm starting to see relative strength flow into this area. I'm starting to see the underlying commodities start to get bought up heavily by the commercials. I'm starting to see, the other, the buy signals start to come in these sectors itself. Starting to see higher lows. I'm starting to see it break out of consolidation. I'm starting to see all of these things together. And when I start to see that clearly, not to mention supply and demand numbers, when you put that all together and you go, okay, now I'm starting to get buy signals in this, you take it. You just take it. There's nothing, it doesn't have to be more complex than that. You take buy signals and you take sell signals. That's it. It's as simple as that. I don't know exactly where energy is going to be in 6 months. Nobody does. And anybody who fucking tells you that, they're full of shit. They have no idea where energy is going to be in 6 months. But I do know that my probabilities on my models, especially when I have all these signals together and I have confluence of signals, now I'm looking at it and going, okay, this has the possibility of really doing well. I'm just going to take it. I'm going to, and not to mention also when you have the structure of your portfolio that a loss is 1% of your account, you can take these swings. You can't take swings like that. This is the reason why people are always talking about trading and the analysts talking about it and being like, why does my portfolio look like this guy? Professional trader has portfolio management. They're managing their portfolio. They have risk management. They're managing the volatility per position. When you have all those things together and it's 1% of your account on your loss, it's a little bit easier to take swings at it. If you're losing, 20, 30% of your account per trade, then it's not quite as easy to take swings at it. Sorry, guys, my computer's I unplugged it for some stupid reason, and I have no idea why. Right. But basically, long story short is to say, when you have these signals, you never know what's going to be the next trade. You're never going to know what's going to be that next trade that makes you money. That is your outlier for the year. If it's as simple as most of the time, one trade is going to be the thing that makes your year every time. 1 or 2 trades most of the time. Some years you'll have like a confluence of trades. You have a bunch of trades that do really well, but most years it's a few trades that are going to be those outliers that are putting together the, like think of Bitcoin in 2017 or Palladium after that. Like these trades are these huge trades that seem to happen once or twice a year in these different assets. How do you find those? People always tell me, they tell the story about me being short oil in 2020, me getting long natural gas near the bottom, all these things. How do I get all these signals? How do I buy Bitcoin when it had that crazy rally? How do I sell things when they're crashing? It's not because I'm a genius. I'm fucking not. I'll be honest. It's because I have systems that tell me when to buy and sell things, and I just have the discipline to execute it. That's it. So energy trade is on at the moment. I've executed, and because of the momentum behind it, this is why you want to wait for momentum into a trade, because the momentum behind it, now my stop is nearing break even. So now I'm at a no risk position in these trades. And so I have this great trade over here that's been tech. and semiconductors and all these things. But then over here, I have a possible new setup that could happen if, let's say, tech starts to slow down, or if something else happens. You just don't know. So because you don't know, you have to put together more than just, you can't put all your eggs in one basket. I mean, everybody knows that simple thing. And yeah, should have, some people are going to have less trades. Some people have less positions, some people have more positions. But the thing is, nobody puts everything in one position as a long-term trader. Sure, there's somebody who's going to say, "Oh, there's a guy who trades the S&P futures only." Yes, he's probably a swing trader or a very short-term trader talking about position trading. Here's oil. It is up and above that 200-day now. And then also the shape of the curve. This also tells me supply is tightening. Obviously, if you look at the supply and demand numbers, you can see that easily as well. So, all these kind of put together that we're kind of seeing this setup here for all these things to rally and move higher. Looking at energy today, we've seen that energy has been, a hell of a move today already. And that's why we put on these trades. We see these breakouts. And everybody's afraid to buy a breakout because it feels like it's going to do this, it's going to come back. And it does at times. There's no 100% system, and it does. But the thing about the breakouts is that that's how you find those outliers. The things you really want, the things that you go back in your head and think about that, hey, something like Bitcoin, I missed that trade. I missed this trade. I missed this trade. You don't miss trades when you're looking for breakouts. Yes, it's maddening. Yes, you have to have a certain personality type to really handle that type of a market or that type of a trade. I think that I am that personality type, and some people are not, and they're going to trade differently, and everybody has to find their own way. But all I can do is show you what I do and what works for me, and this is something that works for me. So I'm using FinViz. I'm not a fan of it. It's not something I have a account on. It's just easy to show you guys what's been going on recently. Now that if we went over that, energy has been a great trade. Gasoline looking really good. Oil is starting to move higher too. However you generate your signals, most of these now will be in an uptrend. Bonds, as I talked about earlier, they've chopped around. This isn't something you really want to be long of at the moment. The 2 years still hanging on to that short signal. But I do think that everything looks like it could move higher. Let's look a little bit further out. So if we're seeing, we did still bottom in an October period, we really would need to see something constructive out of bonds to think that it's a buy. But I'll be waiting for it to get above these highs. Once it gets above these highs, that's when buy signals come. I have lots of opinions and ideas, but that doesn't matter. The signal matters. Softs. So cocoa, it's been a great trade. And once again, a perfect example of how I trade is if you look at something like cocoa and you look at that chart, it is the nastiest chart going back a couple years. Let's look at a monthly. So look at this. It's a super nasty chart. So I don't know exactly when I got the signals just looking at the chart, but I'm assuming, a buy signal, let's say here, and that just turned to nothing. And then let's say another one around here, and that turned to nothing. And maybe another one here. I'm not sure exactly when all these signals, but I remember at least, a few of them that just went straight back down. But you continue to take that next signal and then you get a trade sometimes. So sometimes you're going to go through these losing periods per asset, and it's going to be hard. That's probably the toughest chart you're going to see in the commodity space. But you have to keep your head and continue to go, okay, I trust my systems, I trust my trading plan, I trust what I'm doing. I'm only losing 1% per position. So if I lose 1%, in this period, let's say 5 times to make it an extreme, if I lose it 5 times, it's 5% of my account. But I know that position has netted at least 20% of my account easy at this point. I know it's more than that because there's been 2 trades, but I don't need to get into the exact size. But it's been a great trade for me. So that's been putting in more and more money back into my account. a big winner pays for all your losers. That's the thing, but that doesn't mean, you can lose 80% of your count and a big winner is going to pay for your losers. That means you want to have small losses. So only loss, and only loss that's a good loss is small losses. So think of it this way. There's Larry Height's quote. There's good bets and bad bets. There's good bets where you make money, good bets where you lose money, good bets or bad bets where you make money, and bad bets where you lose money. Meaning, a good bet where you make money is if you follow your plan, and so on. A bad bet where you make money is if you didn't follow your plan, you just bought something because hell, you're just gonna buy it. Okay, that doesn't. You don't know how to do that again. You can't continue to have a process to do that, so it doesn't matter. You can't do it again. It doesn't matter at all. But if you have a good trade and it loses a little bit of money and you just followed your system to put that trade on, now that's a good trade that lost money. And then the bad trade that loses money is if you're, just threw on another trade and lost money, or your loss was too big or something, you didn't follow your actual plan, or you didn't use a stop or something, so you have to always think of trading in that way. Metals, go on the weekly chart. Copper is trying to perk up here. We'll see where copper ends up. Platinum recently gave a buy signal, very weak so far, so it's a very short-term buy signal. We'll see how that ends up. Silver is in a full buy signal now. Once again, it's another one. We'll just have to see how that ends up. And gold has continued to be in a buy signal, but it's been ugly, been very ugly, very choppy. This trend in gold, as you see, we're making higher lows, but the pullbacks are large, but that's pretty normal with things like gold and silver. Platinum made this double bottom and started to turn around. It's a very weak buy signal. I would wait on it to get a little bit stronger, get up and over maybe that 1,000 area, then and then get long. Platinum, everybody wants to buy it because it's so cheap. Don't ever buy things because they're cheap. Cheap can always get cheaper. Meats, so things like this has been a hell of a trend, an absolute hell of a trend. So cattle, that's a move. That's why we do trend following, because we're trying to be in this type of a move. Great move. It gave one sell signal here, got right back into the trade. Same with feeders. That's been a long this whole time. Really good trade. I know not everybody trades feeders, but I'd assume people should start looking at things like that. Those are good trading vehicles. Lean hogs has actually perked up. It is in a buy signal now as well. Nasty down day today. I don't think that's in the actual that's the front month contract, so that's not as pretty. I give you the update on that right now. Let me look at this so I can see what's going on here, because most of the time there's two different things happening. Yeah, I'm in the October contract right now, and it's down 1.6%. So sometimes you'll see that happen in the front month contracts and commodities. It's a good lesson right here for everybody to learn. The contract I'm in, so I make sure I'm always over a month out from the expiration date, just in case there's a panic out for some reason. You always want to be a month out from your expiration date, just in case. This usually doesn't happen. It's rare. Same as oil when it went negative. That's rare, but it can happen. So always be a little bit further out. But once again, the position in lean hogs in the October contract, which we're in, that is only down 1.6%. I don't even know if the front month contract on that's down 17%. Sometimes these things just say crazy shit. Grains. Grains have been, a great trade. Once again, turning around really well. Soybean oil, that's been a good trend. Corn, it's bottoming, trying to perk up. We'll see. I am long those things. I do have a different system for the COT reports that just has a little bit of momentum behind it. So got the COT signal. I did post the corn position, the entry, and everything on Substack. So when you have this position turning around, turning up here after that type of a signal, 4 green weeks, solid trade. Soybeans, I'm not long soybeans at the moment. Wheat, I am long wheat. Canola, still long canola. That's been a great trade. Obviously, that's been turning up really nicely. And finally, currencies. So the US dollar, it broke down, then it retraced all the way back to those lows. Very normal setup. I would expected that, every single day, especially in currencies. Currencies tend to revert back to resistance areas or support areas quite a bit. The euro still trending, little pullback here. The yen, not long the yen at the moment. Waiting on that. The British pound has been stronger than just about all the other currencies, and really, to be honest, I have no fucking idea why. There's no reason for it to be that great, but it is. Swiss franc, that's a long. Canadian dollar is at long now. Actually, there is a long signal there. I didn't update that, but once again, if you own Canadian dollars or looking to buy it, now it is in an uptrend. All right, guys. Hope everybody had a good one. I will let everybody have a good week. I hope everybody has a good week. I'll let you guys go. Thanks for listening to the update. I'll update more later.